Now, during an interview, um, Andy Schectman had a lot to say. And I'd like to give you that information and then give you also my opinion on what's going on as well, because I agree a lot with Andy Schectman, and who wouldn't, right? Now, this is what Andy said. He said, "This was the largest silver drop ever. What the hell's happening to the West? Creating $1 trillion in debt every 150 days or so." Now, that is crazy unless they're intentionally, meaning our government, collapsing our economy. And if you believe in the BRICS nations, also RV, quantum financial system, the collapse of all the banks to bring them to their knees, to stop stealing from us, then maybe you want to hear this. Now, if indeed the banks, this is Andy Schectman, if indeed the banks, like you said, are getting a side, have the record, short positions, or a neutral. Now that's something I've never seen before. 61 to 6,700. This is liquidity event and is not real strength. It forced selling. And if I were wrong about that, then why do we see all of these deliveries? Why is China buying record amounts of silver the same month it gets hammered? To get these banks that have been profiting from a short position for years to make the West and Western system, the bond market currency seems stronger than they were, and to protect the military industry complex because of the massive need of silver in munitions and high tech aerospace things like the F 35s, stealth bombers, and all the things that needs a lot of silver. These things are now changing, and it is a physical possession that will win. Meaning, if you're a collector, you might want to stand by. And when no one stands for delivery, you can suppress the price. But just like Bernie Madoff, when no one asked for their principal back, you can win. You can run a Ponzi scheme. Now, this was the largest silver drop ever. And that's why I took comfort in the BIS coming out and saying, look, y'all, this was structural, not fundamental. Nothing's changed. And I believe that. And that's the message. I would like people on the side of the pond, this side and on the other side, to understand that this is desperation by some players that were trapped. And if I had to guess, this was okay to by the top, very top people, basically saying this is your last chance. Get on sides and cover your stuff. And is there any confidence we see JP Morgan covering 3.8 million ounces of silver at the very bottom? I don't know. Is it? Maybe it is. Maybe they're just really good at timing. But I would say simply that, yeah, I think these people need to get concerned with the price swing. Easy for me to say, I get, because focus on what really happened. Focus on what the biggest players in the world and are doing, and know that this is right out of their playbook. And one thing that I would say to people to give them comfort is that this really feels like the end of the ability to control the price on a substantive basis. And it's happening because we've squandered the trust of the rest of the world, who is now coordinating and motivated. Wealth, sophisticated. Now, this is how I look at it. What looks like panic selling may actually be a controlled reset behind the scenes. And Andy Schectman did point out the labeling that drops as a structural rather than fundamental conveniently shifts attention away from who benefits most at the bottom. When a major player like JP Morgan covers nearly 4 million ounces at lows, that's not noise, it's positioning. The real question investors should ask is why price volatility spikes exactly when liquidity is thin and sentiment is weakest. If trust erosion is real, then control mechanisms may already be weakening. Andy Schectman unravels why global players are no longer playing by Western rules. There were countries that were third world for most of our lives that aren't anymore. In fact, they're very sophisticated and very wealthy and very smart, and they are beating us at our own game. So this won't last. I would say, well, mentioning where the options expire here in a day or two, here you're at the end of the quarter, I would expect to see the prices resume in the manner that we would expect them to do. This environment where we're real soon, hopefully, right after the first people are scared, and Andy is rightfully so. You know, I talk about this kind of stuff happening all the time, and I reference many of the interviews that I research. Andy Schectman is one of them, and Bart Chilton, and I've referenced it in many of my other videos that I do, and I think it's really important that people understand the stuff that we're talking about. It's not a conspiracy. Happens. Well, the head of the CFTC told you that this stuff happens on a regular basis. Western rule of law and the election process and the immigration process and all of these things that made people around the world say, what the hell is happening to the West? And as the quarter prices moved, often say more about positioning than fundamentals. As Andy Schectman points out, timing around the options isn't random. It's when maximum pressure can be applied to reset sentiment and shake weak hands. When former regulators like Bart Chilton openly acknowledge manipulation, it removes the conspiracy label and turns it into structural features of the market. The deeper issue now is declining global trust in Western systems, which historically anchored capital flows. If that trust is fading, capital may no longer behave predictably. Now, Andy also discussed how that shifts would reshape market power globally. What's happening to those countries, I think once you cross the Rubicon and add into a massive fiscal irresponsibility, creating $1 trillion a debt in 150 days or so, as being wickedly monetary irresponsible as well. But I think there's a lot of plan into that. I think there's a lot of plan that's going to move it into the RV and the reset of the US dollar and bring it back to a gold standard. I've been talking about this in the last few shows about the gold standard and about Trump's name going to be on the $100 bill first, and then it's going to be on the rest of the dollars as well. If you don't put it together, then I understand, but that's how I see it. Some ask me, where do I get my information from? Is it true? I'm only giving you what the details that I see, along with my opinion. That's why I say, see my disclaimer in the description, because a lot of what I have said over the years has come true. People told me that $50 we would never see in the future of our lifetime. 10 to 15 years, probably minimum of if it would ever break past the $50 range. Well, it smoked right past that. It did drop back a little bit, but it's only dropping back because they manipulate everything. Manipulation, they could manipulate it to $5,000 if they wanted to. They can manipulate it all the way down to -50 or even lower. You never know. But they've done this with oil. They've done it with other commodities using derivatives. That is my opinion. If you'd like to make a comment in the comment section, I do appreciate it. Now, going around the world with a stick instead of an olive branch and an open hand, I think we are at the end of the rope, and it pertains to the privilege we've had with these commodities. And I just feel that, to me, that there's a realization as those levels. And maybe I'm just using wishful thinking, but I don't really know. I mean, we're going to have to see, kind of thing. It seems like the act of desperation on the last slam down was unlike anything I've ever seen. Indeed, the banks, getting on the side, have record lows, short positions are neutral, and that's something I've never seen before. And if that indeed is what is happening, I guess it does set the stage for the numbers we're hearing coming out of the big banks. Might see gold 6,100, 6,700. How about Michael Hartnett, the chief analyst of Bank of America? Sell half of your bonds, and put 25% of your assets in metals. This is what he's talking about. $1 trillion of debt every 150 days isn't just unsustainable. It reshapes capital allocations decisions globally. Andy Schectman also points out if banks are truly reducing short exposure or going neutral, that signals a potential regime shift rather than a temporary trade. When figures like Michael Hartnett suggest moving 25% into metals, it reflects concerns about the currency debasement more than bullishness on commodities alone. Investors should question whether bond markets and not metals are the real warning signals right now. If fiscal credibility weakens further, traditional portfolios could face structural stress. Now, how institutional positions may already be adapting. Same thing with the chief investor officer of Morgan Stanley. The 60-40 rule that they've used forever, he said, is broken. Sell for 50% of your bonds. That's the 40%, put 20% in the metals. Or Jeffrey Gundlach, the bond king, 25% in metals is not overweight. At the highest level, you're seeing them talking about this being something where price is not something we should fixate on right now. Rather, look at it as an opportunity, because they're right. The second half of the year is going to be fantastic. It's not just me who's saying that. There's multiple people saying this. Now, and the way the way I look at it is this, differently to a lot of people, and is very similar to possibly even you. Gold did what it was supposed to do. We had an institutional liquidity event. It was the only liquid asset that could be accessed to go over into initial hump. The question is, what happens when it isn't the dollar rising? When it's the dollar collapsing? How much gold have you got to hedge your positions? With the hedge your wealth? Well, when Wall Street veterans start abandoning the 64 model, it's not a trend. It's a warning signal. Now, if you're relocating 20 to 25% into metal, suggests institutions are preparing for instability in both equities and bond stimulation into bonds, more or less. The key details most investors miss is the gold's recent moves weren't about strength. They were about liquidity. During stress, If the next phase involves a falling dollar instead of a rising one, portfolio hedging math changes dramatically. That's where traditional diversification may fall when it's needed most. Now, what happens when liquidity itself becomes the risk? Because essentially, the universe of what we'll see ultimately is not just a war event, a black swan event. That's a war event. But what happens when the whole system, it's been talked about, and possibly of funding this debt? So when it all implows, and it is and 100% certain it will so, and the dollar goes to nothing as benchmark against gold, you need your gold. You need the hedge. Now that gold it was there to insulate the institutionals. These are all long now. Everyone's long, except for the poor people who think this is all over. I mean, that's a mic drop moment right there. And then I just want to stress to everyone listening Andrew is very smart and says that so profoundly. But if you're not really paying attention, you may miss what he just said there. He really said that there is a liquidity event and it's not real strength. It's forcing selling, and then everything settles in dollars, giving the dollar this big bump. But if that were true, that dollar was in the full strength and not forced selling, why are the treasury selling off? Because the treasuries to me are the bigger function of the whole problem. And that is, if people are selling treasuries when they're always would run to them in periods of strain like this, that's the key. In other words, typically you'd see dollar strength and treasuries being purchased, yields falling. Now we're seeing dollars strengthen because of the selling and yields rising. At the same time, they're dumping treasuries too. That to me is something that needs to be thought about as well, because again, the West has lost its trust. I think trust in a treasury market where you're seeing this kind of fiscal irresponsibility and weaponization, as we've seen before, in something that we've already well past. So what he's basically saying right now is we've been given a gift. At least that's the way I interpret it, and I feel the same. I know you have to see them for what they are. Rising yields alongside a stronger dollar is a contradiction most investors are ignoring right now. But Andy points out, if this were true dollar strength, treasuries should be rallying, not selling off while yields climb. Divergent signals forced liquidation, not confidence, which historically shows us during liquidity stress events like March 2020, when both bonds and risk assets face pressure. It breaks the traditional hedge framework most portfolios rely on. Now, this is where silent risk builds under the surface while headlines stay calm. And it's why physical demand is exposing these cracks. And if we're wrong about that, then why do we see all of these deliveries? Why is China buying record amounts of silver the same month it gets hammered? And those are the reasons why, well, just saying there is exactly spot on. I couldn't agree more with what Andy has been saying. I appreciate your perspective very much, and I I think it's spot on. Speaking of how Andy Schectman is, how he's on multiple shows using his time when he could be doing other things, but he's out there trying to help people like us. Now they've known this for years. They've been around forever and a day, and they're still actually looking pretty darn good for it. I must say, I appreciate that people like this and others stepping up and again helping people like us. So going forward and ending this show, I hope you have a great holiday, happy Easter, and God bless. Be safe.